Good morning. It's Tuesday, June 11th, about 6 a.m. Central Time. Overnight, the precious metals find themselves back on their back heels, closer to those Friday lows and the Friday washouts. So the gold-silver ratio is starting to tick up again from 73 to 1 back up to 79 to 1. So we're seeing a little bit of stability in the gold market after about that $60, $70 sell-off on Friday. Markets are back close, hugging just above those levels. However, the copper market, silver, platinum, palladium, all continue to weaken, especially silver, which fell 4.76% overnight in Shanghai. So they were on a 3-day holiday, and I think that futures prices had to kind of catch up to that Friday washout. So are we near a bottom? That's one of the questions that I keep getting emails from people, text messages, things like that. So I think copper futures really signal the best chance for bottoming action if you take basically the February lows and you go up to the May highs. So it's about 370 on the bottom on up to about 520. You take the 50% retracement, comes in right around 440. That's where we're trading right now in the July contract. So if you don't have exposure to the copper market, I believe that that's kind of an area that we find interesting. It may start to put some positions on for our clients and also look at longer dated call spreads on that particular contract as well. So overnight, stocks are edging lower. The dollar's starting to rise. Treasuries are also rising as well. We saw some overnight economic data coming out. It was basically unemployment data over in the UK. And what that did was it put a little bit of pressure on the euro currency. The British pound was under just a slight bit of pressure as well. And we saw the dollar index get a small bump up on it. So the traders are really going to be focused, though, on tomorrow and Wednesday's CPI data, and also the Federal Reserve's latest interest rate decision. So the key on the Fed meeting is you want to look at with the sticky inflation. They're going to say that the progress has really it's just kind of slowed. They won't use the word stalled because they don't want to be so pessimistic. And then they'll also say that they're really paying attention to the dot plot. So they'll look at the dot plot, and you're going to want to look into like 2025 when they start to indicate that they'll be cutting rates again. So you look at some critical levels on the gold market. I really think 2,300 is a big level. That's a big level of critical support. You go to the resistance zone, you're going to go up to 2373. If you plot out the 50-day moving average, it'll come up there. But really above there, it's a 2,400 to 2,406. A break above that level, that pocket resistance, could really ignite a rally back up to the all-time highs. Now, the silver market does maintain a bullish trend here. The support is pretty close, though. It's 29.14. We get a break below that, we're going to go back to more of a neutral trend, not a bearish trend at the moment here. And I think your resistance point psychologically on the July contract right around $30. So the main takeaway, though, that I think that people really need to understand is that China is just pausing their purchases. They've purchased gold for 18 straight months. They just paused it. They'll pick back up those purchases at some point in time, and then gold futures should find new upside momentum. And then also silver and copper, they continue to strip away the existing supply out there. The demand is increasing, even with new chat GBT developments and things like that, with all these supercomputers and chips and servers and things like that. It's going to take more copper in order to basically maintain all this and this new robust amount of energy that we're continuously using. So we think long-term structurally, the tide is there that these futures are going to continue to potentially move consistently higher. It's these little waves and these ripples and these kind of when you get a lot of participants in the market. Remember, we have like record high participants for the gold market since 2022 and silver since 2020. So they all tend to jump in on momentum and exit on momentum, and they're not in there for the long haul at all. They're just here to make a quick buck and move on. So, and sometimes they get washed out with the tide as well. So you got any questions, give me a call. We'll be looking at some positions here going out to the end of the week on some of these option plays, but give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.